Hi guys, so I'm going to quickly go over the trade I took overnight session for the draw to liquidity to sell side here on Tuesday, September 24th. So first thing I was looking at is this 4 hour. Obviously we're trading at all-time highs, and normally when we're trading at all-time highs, I'm looking for longs into all-time highs consistently. As you can see from here, we kept sweeping all-time highs, retracement down, sweep all-time highs, retracement down, sweep all-time highs, retracement down, sweep all-time highs. What was different with this retracement here, which we saw yesterday, Tuesday, so looking not this candle here, but these set of candles here, is that A, we inverted this gap here, but B, mostly what I was looking at is weekly profile. We had a Monday that took highs, Tuesday went lower. So generally when I see this, especially at these extremes, this is going to be a weekly profile of Monday highs, Tuesday, Wednesday, Thursday lows, and then Friday back to high, which is going to give you a candle that kind of looks something like this over here, right? So that's kind of what I was looking at yesterday, and that's kind of what made me bearish going into Tuesday's range. So on Tuesday night, when I was looking at trades and I was trying to get into this market, kind of during London, that way I could get in on the wick. If you see at the 4 hour chart, or the daily chart, the idea of taking a daily profile trade or a weekly profile trade during a day is you want to try to get in the trade on this wick here. That way you can capture the bulk of the move to the downside, right? So you want to get in above midnight open Eastern time, right? So that's kind of what I was going for here, which means I'm trying to usually enter this trade London. Also, what gave me more conviction was the fact that during Asian session we ranged, and then London we got this explosive move to the upside, which kind of usually this is a perfect example of AMD, right? You have accumulation, then the manipulation phase, and then we distribute all the way down. So that's kind of what I was basing this trade off of, was this AMD plus the idea of the weekly profile. Okay, so what do I need for conviction on this trade? I really wanted to see on the 1 hour, I wanted to see us hold. Sorry, no, the 30 minutes is what I was looking at. I wanted to see us hold the set of candles here. This bearish order flow here is kind of what I was looking at. I want to make sure that we didn't get above this. We had this nice FVG here, we tapped into it, we distributed down, and I want to see a retest of this FVG, or maybe even the bottom of this range here, and then distribute back down. So the big thing for me was trying to find that entry where I could feel confident in this trade and not get stopped out. Like if we enter here, get stopped here, and then it distributes down. And the way I was able to do that was, first of all, the one mistake I made when I took this trade is I actually tried shorting earlier. So I tried my first short of the day of a Tuesday night was right here, right? I shorted at 880 pretty much on the closure, or just before the closure of this candle here. And we did get a flush down for 30 points. And the reason I took this was because we had equal highs here that were swept perfectly. And then we got this move down, we retested, another move down, creating this bearish order block here, rejecting perfectly off this wick here, got this nice flush down, and from here I was hoping we would just continue dumping. We ended up ripping back up, so I got stopped at break even, and the one thing I realized that I missed out on, or I missed with my analysis, was that market, after this big dump from yesterday, the market really wanted to rebalance this range, right? So when I took this trade, sorry, right here, It really wanted to rebalance this range. So when I took this trade, you can see here's the 50% mark, and I took this trade. That first trade was right here, right? And we had not yet rebalanced. I can draw this out a little bit further. This is the 50% range. So when we got this push back up higher without really taking much liquidity down here, I realized that this pump here was solely for the purpose of rebalancing to equilibrium of this previous day's expansion. Okay? So once we took this, I was pretty confident that this was a good turtle soup to short. The one thing I was, again, trying to figure out was my entry and then my stop loss. So because I wanted to make sure I caught this move and didn't want to miss out on it, what I really ideally wanted to do was I put my limits into short at 9.15, which was 9.15 here was the top of this FVG, and it also helped me mitigate risk if we got stopped out. So obviously that didn't hit, and it was also getting really late for me. I live in California, so it's West Coast time for me. So once we got this push down off of this high here, I realized it was best just to enter, somewhere in the 890s, and then have a high stop with a low position size, and then try to snag, the top tick short at like 9.15, which never ended up coming anyways. So what I did is, once we got this push down here, I saw this FVG, and I was like, okay, I'm okay snagging a short here. So I entered this trade at 892 with the stop loss with my stop loss at 973. The reason I have my stop loss at 973 is because on the 30-minute, you can see this order block right here. Oops, what the heck? My highlighter. This order block right here is 941, and then anything above like the 50% of this, so anything above like 973, 970 kind of area, this is gonna kind of just discount my trade idea, right? We've already taken equilibrium. We should hold this FEG. At the very least, we should hold the bottom of this order block. If this fails, then my trade's botched. Now, the reason I'm able to handle, a 70, 80 point stop loss, which is, I think my stop loss was 80 points, is because I just de-risked, right? Instead of entering my standard 1-2 minis, I dropped down to, I think, 5 micros. I did 5 micros on my tossed up accounts, and I did 3 micros on my other funded accounts. So my risk was, $400, and my take profit was, I think, $1,200. And then for my top step accounts, my risk was like $800, and my take profit was $1,800. So those are still very good risk to reward ratios, going for like a 200 point trade. So entry was 890s here, stop loss way above. We took equilibrium, accumulation, manipulation, expecting a distribution into the aim session. Don't really need to micromanage this trade, so it allowed me to sleep in after staying up late, trying to capture this entry at the wick here. Just leaving that stop loss in, setting my take profit. Now, how did I determine my take profit? My take profit was determined based on the 4-hour chart. So you can see here, the safe take profit would have been 750s. However, on the 1 hour, you can see this big wick here, and then this wick here, and you could have even gone for this wick here. I was very confident we were going to take 655 here, and I was also pretty confident, obviously, we were going to take 708. So what I ended up doing is setting my take profit on some of my accounts to 708, and then my other accounts, I ended up going for this little wick here, going in for the full rebalance of this BPR down here. So yeah, also my last, I guess, conviction is Usually when we get these beautiful manipulation at the top, distribution down lower, you can expect that the bulk of the candle is going to move about 150 to 200 points from the open. So if you can see like a lot of these here, this is a 300 point move. This is, you know, from here down to here, that's well over 200 points. So when we're getting moves like this is 175 from here to here, and then probably 200 from there to there. So a 200 point move from the open of the candle is pretty standard on NQ. And then as well as this FEG here. This is the reason I really expected us to take the short down to 655. I was very confident we were going to come down and rebalance this this fair value gap, and that was kind of the basis of my trade for the week. So yeah, took the trade. I wish I held it for 650. I thought I put my limit there, but looking back, I got filled at 700 on the bulk of my the bulk of my accounts, and I think that's just because I was tired and I didn't want to wake up and see that it whipped 700 and then popped back up to like stop me out, and then tomorrow it comes down to take that 655. So I was okay sacrificing 50 points or so just to make sure that that I took the profits on this account. So yeah, that's pretty much it. That's pretty much what was going through my head throughout last night's trading session in London. The reason why I took this trade, rebalance equilibrium, this fair value gap here, order block here, the bias of filling that fair value gap on the daily chart, accumulation, manipulation, distribution. The reasoning behind why we didn't dump here was to get that equilibrium leg up, to rebalance, so we could have that that energy to push down. But yeah, all in all, really clean, really clean setup, and yeah, see you guys in the next one.